Hi everyone, welcome to another edition of the Future of Insurance newsletter, a LinkedIn series. Today we have Simon Terrance, and we're going to talk about a very exciting topic, a great trend in the insurance industry, which is embedded insurance. Welcome, Simon.
Thank you, Dogan. Great to be here.
Thank you. So why don't we start just quickly with your background, if you don't mind.
Yeah, so I'm an independent advisor to boards and leadership teams around business model transformation, fundamentally changing the economics of businesses to be more effective in a digital world. I work with the World Economic Forum as well on some big, broad topics around helping the world rethink how to be more effective. And I also create ventures with corporates, digital ventures, so they can tackle areas that are more difficult for them to do internally.
Right, and I'm assuming insurance area is one of them.
Yeah.
So I want to dive into this because this is a very interesting topic. I mean, lately in the recent years, I've seen embedded insurance networks, ecosystems, and how. But most importantly, I think how customer experience, customer journey within the insurance industry is changing, right? Or now, I should say, not only within the insurance industry, but broader, right? Do you mind explaining what embedded insurance is and what kind of opportunity you see for not only insurance industry, but for overall?
Yeah, well, so embedded insurance is part of a broader movement towards embedded finance. And what that says is that now with modern technology, we can abstract financial service and insurance functionality and put it into software and then embed that functionality into journeys that customers are going on, which may be separate from the bank or the insurance company. So to give you a very simple example, let's take Uber. So when I get into an Uber, I don't have to get my credit card out at the end of the journey to pay the driver. That's all been embedded in the experience. And indeed, on the insurance side, insurance for Uber drivers has been embedded in their experience of working with Uber. It's part of the proposition that Uber makes to drivers that they can get insurance through their app to help them be Uber drivers. So the notion is that the financial service is embedded in someone else's product, customer journey or proposition. And the customer or the user doesn't have to go to a bank or an insurer to get the cover or the financial service. It happens. It's offered and it happens when you need it, where you need it, in the way that you want it. And it's that technology has enabled what I've just described through APIs in particular to allow any organization to embed financial services and insurance into their propositions to make their propositions more attractive for their users. So that's a sort of very simple definition of what we mean by embedded insurance and embedded finance.
So actually, one of the questions that I was prepared to ask was about, how about the technology? What is the role of technology in this? I'll go ahead and answer that. It's 100% technology driven, correct?
Absolutely, yeah, because what I've just described has happened in the past and does happen today through affinity programs or partnerships or all that sort of stuff. What we're talking about is this happening on a much broader scale, enabled by technology. So the functionality of insurance is abstracted into technology, into software, which then is allowed to be embedded in all kinds of situations that were way too difficult or costly in the past.
Okay, so with that, how do you see the role of underwriters and other professionals like actuaries within this embedded insurance world?
Yeah, well, I think it's very exciting because now, of course, the underwriters can also exploit third-party data, much more data, from the organizations that want to embed insurance into their propositions. So you take the example of Uber that I gave before. Uber has enormous amounts of data about its drivers, where they go, how many crashes they have, how well they drive, how creditworthy they are to be able to afford insurance, and so on and so forth. And marrying that data with the capabilities of underwriters and actuaries means that we can create much more personalized solutions for Uber drivers, for example, and we can reduce the loss rates as well, or the claim rates as well.
So in long term, embedded insurance is kind of an enabler for better results, if you will, for the insurance industry. But at the same time, that touches one of the concepts that I've been discussing in earlier editions, which is, and I call them embedded teams. So really merging underwriting capabilities, actuarial capabilities, more insurance expertise and experience with new skill sets like technical background, technology background. I mean, data scientists, and creating some teams that will have a little bit of everything, if you will, in them, so that they can actually understand this kind of data points, and then also embed them, start using them in the underwriting process, which requires a lot of skill set, as you know.
Yeah, I mean, what we're going to see to enable that is new developer platforms that enable this, that act as intermediaries between organizations like Uber or Walmart or others, right, and all the skills that exist to make fantastic insurance solutions. And it's those developer platforms that will have access to data, tools to configure products, collaboration tools, etc., that allow people to come together in new ways to create personalized solutions. And of course, this creates a threat to the more traditional, big primary insurance companies that have done everything themselves vertically integrated, because now their capabilities are able to be extracted through APIs being made available through developer platforms that enable other people to configure very tailored solutions for end users. So there's quite a big disruptive element to the traditional industry, not only on distribution of insurance, because we're now distributing it through other mechanisms to end users, through platforms and digital services which have large consumer bases, but also disrupting the way that insurance products are even created in the first place. And I've got some great examples, if you like, from Asia that will bring this to life to demonstrate what I mean, which we can come on to when you like.
Absolutely. Before we do that, which I would love to, you also touched the point of technology within the insurance carriers, and these companies are giant companies, correct? And they have been unfortunately suffering from because of legacy systems, the digital transformation, and take an insurance company trying to update itself, bring itself up to speed in terms of digital and technology transformation. And on top of that, you're adding one more pillar there, which is, try to work with, in your example, Uber, and create integrations and all that stuff, which is very hard to do. So back to what you were describing, that middleman has a key role, right?
Yeah, absolutely. I mean, I think you're right that the big insurance companies, obviously, they're under a lot of pressure as well, or many of them at least, and they're trying to optimize the way they do things and spend a lot of money on that.
Right.
But that means that it's very difficult for them to do real breakthrough or disruptive innovation within the core business. So what I spend a lot of my time doing is saying, well, just don't do that in the core business. Create a separate vehicle, a separate entity that can tackle new market opportunities like embedded insurance away from the core, with different people, different metrics, start from scratch with technology, make sure it integrates to the core business, but keep it very separate. Otherwise, you'll just get trapped. The red blood cells will kill all kinds of sort of exciting innovation there. And that message is resonating quite well at the moment, because I think a lot of particularly primary insurance companies can see, exciting new opportunities that the insurtechs are developing. When they see my statistics of $3.5 trillion of potential market value from embedded insurance, they say, "Oh, we'd like some of that as well."
Right.
They equally know they're unlikely to take a large proportion of that working at the speeds they normally work at within the core business. So there are some important go-to-market, organizational and operational foundations that need to be put in place for legacy companies to take advantage of the types of things that we're talking about here.
Okay, let's give some examples, and after that, I'm really curious about the role of agents and brokers within this whole framework of embedded insurance.
Let's take some examples. I've given an example from Uber, which everybody can understand there, and that's an example whereby, Uber wants to attract people to work with it. So it's part of its, it's not a something that it makes money from, but it's an important part of its proposition. If it doesn't do that, people won't come and work for them. Now, it can also be, once they have an employee base in place, an opportunity to offer, paid for additional insurance services. Once the gig workers trust Uber, they work a lot with them, they're willing to then buy other financial services, other insurance services from them. So it becomes, rather than a cost of doing business, to a profit generating activity. And what we're starting to see for other digital platforms that have very large customer bases, they are starting to embed. They started with loans, offering loans, and payments, and they're now moving into looking at insurance a lot, because they know, people like, let's take Shopify as a good example from the US. It has hundreds of small businesses that work on Shopify. It has unique knowledge about those businesses from all the data it collects. It's in a golden opportunity to offer them loans and also now insurance. Or there's more vertical B2B software companies that provide software that runs vertical businesses. And again, people like, let's say, I was talking to one that provides software to the fitness and gym industry. They make half their revenue from providing payment services to their members. And they're saying, well, insurance is another great thing that we can offer, because we know their businesses inside out. We have this unique data. So we're seeing a lot of those intermediaries, Shopify, people providing B2B software into sectors as channels, if you like. And indeed, people like Intuit, which supports lots of small businesses as well. They already starting to sell insurance into their customer base as well. Right. So once you start thinking about it, there's lots and lots of application. We're still in early days of it being smooth and easy to do, but a lot of investment going in now to making that smooth and easy. Maybe I'll give you a couple of examples from Asia, because they really show.
Right. I was going to ask, because Asia and China specifically have been very proactive, right?
Yeah. And they are way ahead of the West in business model innovation. I'll give you one example from China. So Ant Group, which owns Alipay, which is one of the biggest payment platforms in the world. They wanted to provide insurance to rural Chinese people who are pretty poor, and they have virtually no insurance. And this story I'm going to tell could apply in the US, because there's a huge protection gap in the US and in Europe. But in China, you've got tens of millions of people who have no insurance whatsoever. In rural China, they're not well educated, they're not rich. And so what Ant Group did, it leveraged the fact that many people use the payment system that they offer.
Of course.
Yeah, so they created a platform that connects lots of insurance companies. I think they have about 40 insurance companies into their platform. And Ant Group spends a lot of time educating the rural Chinese people about what is insurance, why it's necessary, why it's useful to have. Because they have a large customer base, and they have through their platform a large supplier base. They're able to offer entry-level insurance once they've educated their consumers, entry-level insurance cheaply, cost-effectively, because they're aggregating lots of suppliers, and they're leveraging a lot of customer data to make it very relevant to the user, not sort of very standard products. So they've managed to onboard tens of millions of Chinese people who would never have insurance before onto the entry level at really cheap rates. Really cheap rates for either cancer protection or injury protection or all kinds of things like that, general liability and so on. And that's the starting point. And they've suddenly engaged and brought into the insurance world tens of millions of people. So it has a really important societal benefit, this, as well as an incredible commercial benefit for Ant Group as well.
That was going to be my one of my questions as well, the distribution play. A lot of people might think that embedded insurance, because the insurance products are being distributed through other partners other than brokers or agents, if you will, and through technology, it is replacing 100% the existing premium, but not really if you think about it, because most of embedded insurance products are suggesting to be personalized, tailor-made, Expedia experience. You buy a ticket and you check the box and you have a cancellation insurance, kind of more very specific niche products. So how do you evaluate the role of brokers and agents, and this embedded insurance is disrupting their business, or there's a collaboration opportunity there?
Yeah, I think it's a mix of both. I think there's a lot of at one level, embedded insurance is about just increasing the volume of insurance, because people just wouldn't even know about it or even afford to buy it. So at one level there is that, and then that's rising. That's the rising tide that floats all boats, of course. Right. But there's a lot of insurance which is much too complicated. If I buy a bicycle, if I buy a sort of off-road bicycle for maybe $500 or $1,000, right. There's no need for me to go to a broker to sort that out. The brokers makes it way too complicated and takes too long and so on. So there are certain situations where certain products, you don't need any complex products. You just need something simple that works and is reasonably affordable, and you can pay it in chunks and you can cancel it when you need it and all those things. So I think there's a lot of the friction of going to a broker will probably disappear or be replaced by embedded. But then there is, for more complex types of insurance, of course, the need for brokers and their skills. And they can also act as an intermediary. If they're smart, they could also act like Ant Group as an intermediary for new types of solutions that they could offer to their customers as well. So I think it's right. In my analysis, when we look at the share that pure embedded insurance will take, it's taking bits from most of the other channels. But I think, for the smart digital brokers, there's a golden opportunity for them to rethink their business in this context. But it is potentially a threat if they don't properly understand and work out, where to play and how to win in this market.
I think we covered a lot of things. So thanks a lot for your time, Simon. These are great insights. Any last thoughts you would like to share?
Yes, and thank you, Dogan. I've enjoyed our chat. Yeah, last thoughts is that this is a major societal challenge. There's this enormous protection gap. In the US alone, it's something like $30 trillion, the gap between the amount of money we need to retire comfortably and the amount that's being saved. And that's growing and growing. That's just the US alone. So there is a really big societal benefit from rethinking the whole insurance system. And digital technologies is allowing us to do that. So there's a big noble purpose behind this, as well as a very significant commercial opportunity.
Thanks for your time, Simon. Hope to have you again in the show.
My pleasure. Thanks a lot.
All right. Thanks. Bye.